Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us this afternoon, we have David Snitkof, Head of Analytics at Ocrolus. David, it's great to meet with you. Welcome to Trade Talks.
Great to meet you too. Thanks for having me.
You got it. And David, how are companies using data to change, refine, adapt their business models post-pandemic?
So what I think we've seen in the past year and a half is the data that businesses had became much less useful and in some cases irrelevant overnight. Because especially if you were in a lending business, let's say lending to small businesses, lending to consumers, the way you evaluated their financial state, their income, their employment, their assets, their cash flow, whatever was true in March of 2020 wasn't true in April of 2020. And that meant that businesses needed to find new data sources, new ways of bringing that data together to actually understand the unique cash flow dynamics of the customer and evaluate them not in a one-size-fits-all kind of way.
How are lenders able to assess the creditworthiness of small businesses? What metrics have changed?
So I think what's changed is less reliance on traditional credit. You know, traditional credit is still valuable. It's very valuable to have a record of what loans you've taken in the past, how well you've paid them off, if you haven't paid them off. But much more important for businesses is to understand the unique cash flow dynamics of a business. So if you can understand the revenues, the expenses, the reliability of those revenues and expenses, payroll expenses, rent expenses, all those different things. And it's definitely not that you want to evaluate a small business the same way for every kind of business. Every business is unique. And so what I see lenders doing is looking at different verticals of businesses, finding all sorts of data sources, bank data, tax data, payroll data, in addition to traditional credit bureau data, and really using those with machine learning to construct a financial profile of a business.
David, what does digital transformation mean to small businesses, and what should they be thinking about to set up their organizations for success, both near and for the long term?
You know, the way I think about it is we're in this golden age of customer service. And if you're a business, you can reach your customers through many, many digital channels. Sometimes you can still reach them in person. There are a lot of different things to do. And for a customer, they actually don't care. And one of my views about fintech is customers don't care if you're a fintech lender or a bank lender. What they really want is the right product on the right terms at a good cost with really great service that actually knows about you. And everything else doesn't really matter. So I think it's about using the channel that you have for all that that channel gives you. If you have an in-person channel, use it to the best of the ability. You know, be an Apple store, don't be an old kind of electronics retailer. And if you have a digital channel, don't just do the same thing you would have done in a branch online. Find a way of using that channel for what it gives you uniquely.
And David, here's an interesting question. How is artificial intelligence impacting the process of gaining access to capital?
So when I think about access to capital, I think all about diversity, and it's about a diversity of data sources and a diversity of products. So in a time, let's say pre-machine learning, pre-artificial intelligence, we were limited in the amount of data that you could actually consider in making a lending decision for a consumer or a business. Now that you have lots of data, massive computing power, and the ability to automate all of it, if you're a forward-thinking lender, you can gather data from many different sources: credit bureaus, banks, taxes, credit card payment streams, payroll systems, all these different things, and bring them together and put them in the kind of underwriting model that can, in an automated way, assess a borrower's creditworthiness and assess the viability of their future cash flow. So the thing about access to credit is you want to give those customers choice. If all these different lenders can use many different data sources, they can put them together in unique ways. What that allows customers is the ability to shop around. And if a lender can give you a fast decision, then you as a customer actually have a lot more power and ultimately more access to credit, because now you're in the driver's seat. You're not just dependent on what one institution has to say about you.
Explain how customer expectations have changed post-pandemic and how they can be proactive in meeting and exceeding service expectations.
Well, I think the expectation from customers is that there's always a great digital experience no matter what. So you have this time in the world where everything was shut down and you couldn't get an in-person experience whether in banking or anywhere else. Now, so the expectation has just been raised where you have to be able to do everything through every digital channel, and it can't be less. It can't be a less, lower fidelity version of what you might have done in person. So the expectations are very high. And I also think the other great thing raising expectations for customer service is the fact that, look, every single brand, every big brand engages with its customers on Twitter and Instagram and Facebook and all these different channels. And you really just can't afford to give your customers a bad experience because people can look it up. People can see the ratings. People can see how you interact with your customers. It's much more public than it ever was.
And David, to wrap up here, we touched on this a bit earlier. How does fintech infrastructure catalyze the development of new lenders and credit products?
So this is what we work on every day at Ocrolus. The best part of my job is getting to talk to new and interesting lenders, creating interesting financial products for all different segments of customers and businesses. And when you're in an infrastructure layer, what I think about is it actually becomes easier, it becomes more straightforward for a company to focus on a particular segment of customer and develop a solution that really makes sense for that customer. Because if you can plug in to Ocrolus and Plaid and Stripe and other types of fintech infrastructure companies to provide the core building blocks to build a customer experience, then if you're the lender, if you're the financial services provider, you can really focus on product development and customer acquisition and customer service and not have to worry about a lot of the back-end infrastructure.
All right, David, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.